GameStop has completely short-circuited the financial markets and online trading platforms like Robinhood. Now, the stock market as a whole is down big. YouTube and the internet are on fire talking about the GameStop situation, so I'm not going to rehash a lot of that, but on today's video, what I am going to do is tell you why this is all bad news for the financial markets. I'm going to talk about what's coming next, and most importantly, what you need to do. Let's go. Hey, what's up guys? It's Danny, and let me tell you a little story. The year was 1999, and I was attending law school and MBA school over at Pepperdine University in Malibu, California. It was right smack in the middle of what is now remembered as the dot-com bubble. But at the time, all I knew was that all of a sudden, everyone was becoming an expert in the stock market, and everyone was a day trader. Literally, you guys, in class, everyone was busy trading stocks, and if you're old enough to remember that time, everything was going up, and we never thought it would do anything else. Admittedly, I also got swept up into the frenzy, much like everyone else around me. Well, we know that nothing goes up forever, and in March of 2000, as many of us remember, there was a huge stock market crash. In fact, if you were around and remember that crash, hit the like button on this video. But in all seriousness, you guys, if you're getting value from this video, do me a quick favor and hit that like button so that YouTube shows this video to more people. It will support the channel, and I really do appreciate it. Anyhow, fast forward to 2007, and at that time, I was just getting started in real estate after leaving my law firm job. This time, the real estate market was on fire, and all of a sudden, everyone I knew had become a real estate investor. We quickly forgot about 2000. If you had a pulse at that time, you could get a loan, and people were buying up houses like they were McDonald's cheeseburgers on the 99-cent menu. Some people did make a lot of money buying and selling houses, but we know what happened next. In 2008, the subprime mortgage market collapsed, and with it, so did the entire housing industry in the US. The stock market plummeted as well. Wow, you know guys, looking back and thinking about this, I keep finding myself in all of these interesting situations. Anyhow, let's see if history has taught us anything. Since that last crash in 2008, the stock market and the housing market have essentially been going up at a record pace. Folks, we know that all markets are cyclical and can't go up forever, right? Or can they? Maybe this time is different. What do you think? Let me know in the comments below. And that brings me to GameStop. Now, I don't want to give you a super long and complicated financial explanation of this because there are already a lot of videos on YouTube going into that into excruciating detail, and you may have already even seen a few of those. Let me instead simplify the situation for you. In short, no pun intended, some average Joes on a Reddit board realized that institutional investors and hedge funds had shorted the heck out of GameStop. If you're not familiar with that term, shorting a stock is essentially the opposite of buying it. So instead of buying an actual stock and betting that it's going to go up, you can short it, which means you're making a bet that the stock will go down. In technical terms, you borrow the stock at the current price and sell it to someone else who's willing to pay that price with the promise that you will eventually buy it back and give it to the person that you borrowed it from. Make sense? Now, if the stock goes down like you thought, you buy it back at the lower price, you quote unquote sell it at that original price, and then you pocket the difference. But if the stock goes up, short positions typically have an expiration date. So at some point you have to close out your position and buy the stock back at the higher price, and then you would lose the difference between that higher price that you paid and the lower price that you sold it for earlier. This is, of course, a very risky position to be in because if the stock keeps going up, your exposure to bigger and bigger losses also keeps growing, really without a limit. And that is exactly what happened here. The community on Reddit all got together and recommended that everyone buy GameStop because they saw that there were such huge short positions on it. That started to push the stock price higher, of course, as there was more demand than there was supply. When hedge funds realized this, some of them started to cut their losses by closing their short positions, which then created what's called a short squeeze. And this scramble to buy more GameStop shares, combined with those average Joe's unwillingness to sell, only added to the upward pressure on the stock's price, sending it to ridiculous increases of over 800%. The same situation then played out on several other stocks like AMC Theaters, and it's actually still happening, as the Reddit community folks are telling everyone to hold onto their shares and don't sell them even though they're up big. Now here's the crazy part, you guys. Some of the hedge funds have actually closed their positions out, as I mentioned, and taken their losses, but some of the other ones are still holding on. In total, it is estimated that the losses for the hedge funds could be upwards of $20 billion this month. That is crazy. So it looks like David has slain Goliath. But while all of this has been going on, the hedge funds and the institutional investors also cried foul and demanded more regulation. Robinhood, which is an online trading platform, suspended trading on GameStop, which actually infuriated all the retail investors and sparked several class action lawsuits. From the retail investors' position, they're thinking that these hedge funds have been seemingly manipulating markets for a really long time and taking advantage of average people. Think back in 2008. And now, when the people have fought back, they suddenly want more regulation. The government even got involved and has already called for congressional hearings on the matter. Can you smell the hypocrisy, folks? Anyhow, it has become a total mess. And in the midst of it, the stock market in general is feeling it as well, as overall stocks have been down. Which leads me to the $1 million or maybe $1 billion question, you guys. What happens next? When you combine all of this uncertainty and distrust in the financial markets, and everyone now once again thinking that they're a stock market expert, remember the story I told you at the beginning of this video about 1999 and 2000? And then when you combine it with the political mess that we've been going through, the pandemic, and the fact that the government has printed a ton of money, there could be some serious trouble brewing ahead. Typically, printing as much money as the government has in the last year and injecting it into the economy would create inflation. It'd probably create massive inflation. Now that hasn't happened yet because things have been closed and people haven't really been spending that money. But once they do, watch out. Okay, so what does all of this mean for you and me, and what should we do? First of all, quick legal disclaimer. My YouTube channel is meant for informational purposes and shouldn't be taken as investment advice. Please do consult with your investment advisor, attorney, CPA, etc. There, legal mumbo jumbo out of the way. So the first thing you should do is hit that like button if you're enjoying this video. No, I'm just kidding. The first thing I would say is that you should be very careful with extremely risky investments. The stock market and the real estate markets are going to have corrections. It's not a matter of if, but when. If we also see inflation, that could mean disaster for a lot of people. The best thing you and I can do is have a diversified portfolio and also look to invest in assets that are hedges against inflation. While gold, commodities, and bonds are classic investments to hedge against inflation, I want to talk about 3 other things that I believe will be some of the most important assets going forward. First, let's chat about Bitcoin. Now let me tell you guys, for the longest time, I was a total Bitcoin skeptic and naysayer. It wasn't really until this year, that's right folks, 2021, that I started to get educated on Bitcoin and realize how important it is, and that's what made me a believer. I recently interviewed Corey Clipston, the CEO of Swan Bitcoin. You can actually check out that full video right over here. And it really opened my eyes as to why Bitcoin is such a great asset to own, especially with everything I've talked about on this video. Bitcoin is not under the control of any country or institution, and there is a limited supply. If you're interested in Bitcoin and you want to learn more about it, I would highly recommend that you grab a copy of Inventing Bitcoin, which is a book you can download for free by clicking the link down in the description. And if you want to start buying Bitcoin, the best way that I have seen is to put it on autopilot. And you can do that with Swan Bitcoin. You can also get $10 of free Bitcoin when you click the link below and open up an account. The second asset class I want to talk about is the stock market. Now, I know what I said, be careful with the stock market, and that still stands. If you're buying individual stocks, it can be a pretty risky proposition. However, you can buy index funds that cover a sector, or you can just buy the entire market. Or you can work with a professional investment advisor who can create a diversified portfolio for you that makes sense given your goals and your risk tolerance. If you want to get started investing in the stock market, or you just want to open an account in a different platform, you can get 4 free stocks valued at up to $1,600 each at Webull by clicking the link down there in the description, opening an account, and funding it with at least $100. And third, of course, is my favorite, real estate. While real estate can't just keep appreciating forever, over the long term, real estate is not only a great hedge against inflation, but also a fantastic income producing asset. If you're interested in investing in real estate or just want to find out more, you can reach out and book a free consultation with my real estate team anywhere in the US, and we'll discuss your goals and we'll see if we can help you out. What do you think about everything that's going on lately, you guys? Are you evaluating your investments right now, making changes, making some moves, or thinking of doing something different? Are you currently investing in Bitcoin, in the stock market, in real estate, in all three, or maybe something else? Let me know in the comments below. I say this on all my videos, but one of my favorite things about this YouTube channel really is reading and responding to your comments, and I do look forward to chatting with you. Again, be sure to like this video if you got value. Follow me on your favorite social channels and text me so you can connect with me directly and so that you know about my next giveaway. Thanks for tuning in, and I'll catch you on the next video.